Today, we're going to speak about currency depreciation, the reasons for depreciation, how it affects you, why Ndovu, why you should consider Ndovu, and then we'll summarize this presentation and shortly thereafter go into the Q&A session. So what is currency depreciation? So this is just generally the fall in value of one currency in relation to another. And in this presentation, we're actually just going to talk about the Kenya shilling depreciation pegged to the US dollar. Now, what does this mean? Over the past year, let's say you did have 1,000,000 shillings and you hadn't invested it in anything. Basically, you would have lost about 15% of the value, and it would be down to about 840,000 shillings thereabout due to depreciation. And from year to date, that is in the past 3 months, you would have lost 7% of your portfolio value, or your 1,000,000 shillings to depreciation. So as you can see, this is a very serious issue that many people do not really take into consideration when they think about their investment life cycles, and only focus probably on inflation and other metrics. But depreciation is a very big factor that I would like all of us to seriously consider. So what are the reasons for the Kenya shilling depreciation? There are various factors that come into play, but some of them here would include the Ukraine war, with the global value of oil and inflation as well. So how does the Ukraine war, for instance, affect our depreciation? Ukraine itself is regarded as one of the world's food baskets. So when they went into war, the supply of grain out of Ukraine kind of like slumped. And due to the normal market forces of demand and supply, once you have a reduction of supply in one item or the other, the price skyrockets. In the same regard, Russia is also one of the world's major exporters of oil and gas. And again, due to the war, it caused supply issues, which also raised the prices of those commodities as well, leading to a global inflation on many items around the world. So how does this affect you? As an individual, you might want to pay school fees for your international students or children or family members. Having to go out and looking for dollars to pay for those sorts of fees means that today you'd need to spend a lot more Kenya shillings than you would have, say, a year ago. For example, just hypothetically speaking, last year you probably would have spent 100 shillings to buy a dollar. This time around, you're spending about 130 shillings to buy the same dollar. So it means that a lot of your hard-earned money is going towards just buying the USD for such payments. Another thing is that salaries have not grown in tandem with the rate of depreciation that we experience to the US dollar, meaning that we are really getting poorer quickly, which means our purchasing power is not growing rapidly. And so to kind of mitigate the problem of salaries not growing as much over time, it will be prudent to make investments in USD. This is just to protect you and your hard-earned money from this depreciation and its effects. So why Ndovu? We at Ndovu we provide various US dollar-based investments in the way of our funds. And for example, I've put up some of our products. Like, for instance, we give access for our subscribers, our clients, to be able to invest in gold and also in the S&P 500 in terms of the blue chip fund. Now, for example, gold has grown at a rate of 14.65%, as it's mentioned here. This means that if you had 100,000 shillings invested in this particular fund last year, by now you'd be up by about 14,000 shillings, which is a very good return. And on top of that, we are very aware that we also have got our Muslim brothers and sisters. This gives a chance for halal investments. Well, it's one of our halal investment offerings. So we actually welcome one and all to be part of our family at Ndovu. Sorry. All right. On top of that, we also provide access to a USD corporate bond with a minimum investment of about $10,000 to $50,000. And this gives a return of about 5.5 to 7% on USD, which is a very great return. In essence, if you invested the minimum of $10,000, right, a year ago in this particular corporate bond, it would have grown by about $700, which on the USD is quite significant in terms of USD investments. On top of that, we at Ndovu, we give you access to our expert financial advisors who would actually be in a position to hold your hand and recommend our various particular offerings to you. This would obviously be determined by the kind of investment profile you have as an individual. We also provide transparency through our online platform. This means that you're able to view your portfolio changes from the comfort of your home through even our web app or our phone app. Basically, we have an app on iOS and on Android, and this gives you the ease of comfort of following the growth of your portfolio from the comfort of your home. Also, in terms of investments and withdrawals, you're able to do that very simply and quickly and efficiently. For our other funds, we provide a minimum investment of about $1,000, which, if you think about it, is a good way to step into the US dollar investing and not be left behind by the times. We have a low annual management fee of about 1% per annum. And this is much lower than many of our other competitors out there who would at times charge from between 3 to 5% per annum. So we are very competitive in that regard. We are also regulated by the Capital Markets Authority. So this means that we are very strictly regulated, of course, and we follow the investment policies and procedures to the T. So in summary, what we are asking you to do as an individual or maybe as a family or a corporate is for you to protect your portfolio value from currency depreciation. Try and invest at least 50% of your savings in USD, right? And begin to make your money work for you. That way you're not left behind on current opportunities to ensure that your portfolio doesn't stagnate in growth or doesn't shrink over time. With that, I have come to the end of the presentation, and I would like us to now jump into the Q&A session. Thank you.
Thank you so much, Martyn. Before I take us into Q&A, wow, that was straight to the point, brief and straight to the point. I think what we can do is probably have guys send their questions on chat, or if you feel like you are able to speak, please unmute your mic and ask your questions so that we can then be able to take them, and answer them accordingly. So should you have any questions, please do feel free to unmute your mic or put them in the chat. Okay, Lydia.
Thank you, Prezzo. Thank you, Martyn, for that presentation. Very straight to the point. I'm curious, you mentioned about these blue chip companies. Would you mind elaborating more? Like I've seen from the picture, there's like Instagram, Twitter, those kind of companies. Do you mind elaborating like what kind of companies fall under that category? And then do you advise clients like whether you're going to, do the clients get to choose which company that they would like to invest in, or is it for you guys to advise which is the most lucrative? I'm just curious about that aspect. Thank you.
All right. Thank you for both your questions. So basically, this particular fund that you are able to see that I shared on the slide is what we call an exchange-traded fund. And an exchange-traded fund, in short, is just basically a basket of various stocks that, in this case, are within the New York Stock Exchange. So what happens is, in this basket, we have got several tech-related companies in there, and you would be buying into the value of this basket, this ETF. What that entails is that should any one of the companies within the portfolio of that ETF go down in value, it does not really affect the overall value of this basket itself. So yes, we do have that offering to provide, and other various ETFs, which are all dollar-based. To answer your second question, we as financial advisors would give you an opportunity to select which fund you'd like to invest in. And yes, we would give you recommendations and would give you proper explanations on each and every fund. And that way you're able to make an informed decision as to where you'd like to place your funds. Thank you. I hope I've answered both your questions.
Okay, I'd like to take the 3 questions on the chat and then we can proceed. Yeah, I see one question is asking, what's your outlook on the dollar towards the rest of 2023? The second question is asking about how...
Can I ask a question, President?
Okay, let's first do the 3 on the chat and then you can ask. Is that okay? Thank you. So then there's a question on, do you know any banks that have good USD saving rates? Because most banks seem to have good on Kenya shillings. Saving in USD is not yielding much. I think the latest rate I got was 1.3 versus the Kenya shilling, which was 6%. So maybe probably you could advise. And the last question on the chat for now is, for those selling dollars, do you see the rate getting higher, or is the dollar now stabilizing? We were selling at 144 at some point, but today was at 132. It seems to be dropping. Any comments on this? We can take those 3 questions and then proceed.
All right, thank you very much. So my personal outlook on the US dollar is that yes, it might end up depreciating further. And this is because as a country, our outlook is not too favorable for investors. And that in itself sort of leads to the depreciation of the currency or capital flight from Kenya going abroad, meaning that obviously a lot of dollars will be in demand. Yeah, and that would definitely lead to further depreciation of the shilling. Secondly, I can't really speak to banks, which banks you can buy and sell your dollars at, right? But to tie it into your third question, being, are there any good USD saving accounts? So what I would say to that is that, look, rather than keeping your money in a savings account, yeah, you are better off investing it and growing it at a much faster rate. Because what that does is it grows your portfolio much faster, and you're also able to make your money work for you. Banks, yes, they're not bad. Savings accounts are not bad, but not really much happens to your benefit with just holding it in a low yielding savings account. Thank you.
Okay, who had a question? There was someone who wanted to ask a question. Please unmute and ask. Or has your question been answered? Okay, any other question? I see on the chat group, on the chat, Radik has, if I've said his, I hope I've said your name properly. The rate has stabilized due to government intervention. Therefore, they're selling at 132. If you're looking to sell dollars, please get in touch. We aim to offer better rates. Okay. Those who have dollars and they're looking to offload their dollars. Okay, so there's a question. What was the net return for most of Ndovu's USD clients in 2022? And the second question is, what is the effect of the USD investment in the latest news on China and Russia? Some countries in Middle East and Asia are moving away from trading with the USD. What will be the effect? We can take those 3.
All right. In terms of answering the first question, I would like to call in our CEO, Radhika, who is on the call. Yeah, and she would be in a better position to give you a clearer answer on that.
Hi, everyone. Hi, everyone. Pleasure to be here. So thank you so much for having us. I hope you found the presentation clear, concise, and straight to the point. So regarding the question on what has been our return on average for over the 2022 year period, so it depends on the portfolio that the person was running. But on average, if you were conservative, that means somebody that was looking to preserve their capital and wanted to just make sure they're outpacing inflation, they experience returns of anywhere from 10 to 12% on the Kenya shilling. And then for a balanced investor, but these are individuals who are looking for capital preservation, so protecting the money that they put in, but also a little bit more growth, but not too much growth, because with growth comes a lot of ups and downs in the money that you've invested. So those individuals on average took home anywhere from 12 to 16%, again, on the Kenya shillings, depending on what they were investing in. And then lastly, if you were an adventurous investor, so this is somebody who's willing to accept any ups and downs, doesn't matter the time of day, they definitely want to just focus on returns. Their returns were anywhere from 12 to about 18%. And the reason that is because As you know, global markets towards middle of last year and the beginning of this year have actually come down. And one thing we like to say is that it is very important to think of investing for the long term and not look at it on a shortly 1 year basis. So what we promote at Ndovu is long-term responsible investing that leads to a lot more growth rather than looking at short-term periods where somebody's trying to make a quick buck. And one thing, the way we help people create wealth is by investing through a fund. So the blue chip fund there is the S&P 500. Instead of saying to Joseph, why don't you go and put your money in Apple? We say, we think that the technology sector is a good place to hold your money. So in the technology fund, you will have over 350 companies. These are names you all know. So Microsoft, Google, Apple, Tesla, Facebook, and the likes. And instead of saying to Joseph, go buy Apple, we're saying just hold your money in the fund. So on the day, let's say 3 years from now, Joseph wanted to take money out and Apple had been fined for data privacy because they let someone's data get leaked. On that particular day, Joseph would have actually lost money because he was only holding Apple. So this type of investing where we say hold the fund is there to deliver anywhere from 10 to 16% returns on the dollar. So if you look back over the last 10 years, every year the S&P 500 was growing at about 15%. So right now, yes, we're going through a global recession. There's some of the things that Martyn mentioned, the war, the pandemic, hyperinflation, high unemployment. But these are normal things. So if you look back in history, about 100 years, we've had 22 recessions. And on average, it takes 18 months for us to come out of a recession. So we're expecting, again, this recession to take about 18 months, and we're already 6 months in. And we always say, if you have a mindset of investing in creating wealth for the long term, then now is a good time to buy. And you don't want to buy essentially when the market's doing really well because you don't see any upside, so you don't see your money grow as much. And the key thing about Ndovu is that we actually guide you through our financial experts of how to think of the market. So recently, of course, numbers have come down. So if you had invested last year, numbers have come down, but this is where our financial advisors step in to say, yes, numbers have come down. And if it makes you feel uncomfortable, don't sell, just wait. And I think that's the key value that we drive at Ndovu, is that we're with you along the journey to say, this is now a time based on our knowledge and expertise for you to not to sell, but just wait. And then we have other clients who understand the market and are quite well versed, will say, oh yeah, this is the time to buy. So you'll see a lot of money going into the market now, even if we are in a global recession, because it, traditionally, I'm sorry, I'm going on a tangent, but traditionally, that's what stock markets do. And one last point, the most simple way to think about the stock market, so this is the way companies perform, is look at it as human progression. So if we think that companies such as Apple, Microsoft, Google, Procter & Gamble, FMCG products continue innovating and producing new products, and the consumption on the other side is from us, who are individuals who are moving from, due to the internet, from middle income to high income, low income to middle income, our consumption goes up because all of us want to be part of that growth. So if you just picture a stock market chart, if we believe that the stock market is a reflection of human progress, we know in 3, 5, 10 years' time, we will see the value of our investments go up. So yes, there will be a little bit of noise, which we're experiencing right now, but in the long term, and this is why investing is very much for the long term, we know that we will increase our wealth over time. Sorry, that was long-winded, but I hope that answers your question, Joseph.
Okay, thank you so much for that explanation. It was very beautiful and very well articulated. And I see guys are asking, how can they invest in gold? Which product does Ndovu have that has the 18% return? Are you able to speak on that as well? Madaraka or Martyn?
Yes, Martyn, shall I take this?
Yes, go on, Radhika, yes.
Yeah, so just looking at the Sheila's sorry, I hope I pronounced your name, or Sheila, sorry.
Yes.
Sheila's asking, what adventurous products does Ndovu have that gives you 18% return? So if you sign up onto the platform, we do goal-based investing. So essentially, before you even get to signing up, we ask you to answer 4 questions. And then based on that questions, Sheila and everyone else, we tell you based on your lifestyle, this is the kind of risk you should be running. Not, you might think you're aggressive, but actually your lifestyle might tell you should be a balanced investor. Or you might think you're conservative, but your lifestyle is saying actually you're in a very good position. You can actually take a little bit more risk and achieve your goals faster. So the one that gives you 18%, that portfolio is the adventurous portfolio, and that has an allocation of 70% towards equities and 30% towards bonds and cash. For the bonds and cash, we use investments such as a money market fund and a savings product that we've launched. And we also use the infrastructure bond as a good example, and a US bond fund to generate returns. And then on the equity side, we focus on three funds. One is the S&P 500, which is basically all the companies that are listed on the New York Stock Exchange. There's 500 of them. And then we look at the market. We see, okay, which one is so technical stuff come in here. You know, when markets are doing badly, you want to go on the defense. So we look for defensive funds. So that could be something like healthcare, because healthcare is a necessity, not a luxury. And then we also have technology in that fund, because as you can see, technology is driving everything. Everything you and I do today is linked to tech. And what we do as part of that portfolio, we dial up and down the allocation as we see fit when markets change. So that's the composition of the portfolio that gave you 18% if you were with Ndovu at last year. Now, this year, again, keeping in mind, I mentioned the recession is happening, so we're not expecting to see 18%. But in my eyes, for an adventurous individual, if we see anywhere from 12 to 14% on the dollar, that's still a very good return in this market. And one thing Martyn didn't mention is that we really believe in the infrastructure bond of Kenya. You know, the last bond returned 14.33. Generally, Kenya has been a very strong market. If you look at us across the African continent, the good thing about that product is tax-free. Our currency has remained stable, and the comment around why you saw dollar rates coming down is because of central bank intervention to say, okay, the dollar is getting out of hand. We need to control it so that our currency remains strong. So that's really good signal that the CBK know what they're doing. And essentially, if you are holding your money in Kenya shillings, yes, it's important, like we said, 50% to be in the dollar. But if you're still not comfortable with the dollar, then please do invest in the infrastructure bond. And also we make it easier for you to do that. We bring down the allocation from 100K, which is the minimum, to 50,000 shillings whenever the bond is available. So I hope that was comprehensive.
Yes, it was. Yes, it was. Thank you so much for that. But you didn't touch on the gold, how to invest in the gold.
Sorry, so I'm gonna just look at the question so I know I'm answering it properly rather than I can't see the gold question, but okay. What was the gold question?
It's how do I go about investing in gold?
Oh, okay, perfect. So the way you can invest in gold is simply sign up on the website link that Caroline has put in on the chat. We can also share it after this, and you can share it with your members. But essentially, you sign up and you go into general investing in. Gold is a fund that you can invest in. It's very intuitive. I'd like to say you can click on it and it says, how much do you want to invest? And then you just follow the payment instructions and that's it. And of course, you must do KYC because we're regulated by the Capital Markets Authority and we need to make sure that we are we need to make sure that we're abiding by the law. So it's as simple as that. And whoever asked the question, if you want, you can also have Martyn take you through how to do it and give you a bit more explanation on how it works, etc. So I see there's a question here from Jeffrey that says, you mentioned 5 to 7% on the dollar. Is this guarantee? Our SACCOs give us 8 to 14%. How is that competitive? Jeffrey, can you clarify whether the 8 to 14% is on the Kenya shilling that you get from the SACCO, or are you getting 8 to 14% on the dollar? Because if that's the case, then I would love an introduction to your SACCO. I don't.
Maybe we can take Dennis's question, and then as he types out whether it's the Kenya shilling or the dollar. Immediately after Dennis is asking, Dennis's question.
Perfect. So Dennis is asking, having seen the dollar gain against our Kenya shillings in the last 3 years from 87 to 145 now, some of us who are in the importation business are struggling to keep US dollar afloat after sales. We cannot even invest in short-term markets as we need quickly convert our cash flow into KES to USD to buy stock. We're not sure whether any measure will protect us. We even determine a mean rate to work due to many factors. So Dennis, it's not just you. I know the entire manufacturing industry of Kenya is struggling with the same problem. And there is really nothing at this stage that you can do, but I am aware that the government of Kenya are trying to look at a solution. Now, the challenge that Dennis is referring to is that, just for those who may not know what we're talking about, is basically he's in the importation business. All of his stock is bought in dollars, but his sales are in Kenya shillings. And so you're buying something at a dollar price and you price it at the current rate. And then within days, the dollar moves so much that the price that you've priced it at is not affordable, A. And B, because there's a shortage of dollars, you're actually just trying to maintain your float so you can keep your business going. Dennis, I will try my best once I get a solution. I'm working with a few manufacturing companies. So just drop your email address in here. We're working to find a way to manage float. And so you have a long creditor period so that you can at least make sure you have enough stock. But to date, there's nothing. I'm with you, Dennis. I hear your troubles. There's nothing we've discovered at this stage.
Radhika, I'd like to ask Njoki Ndongo to voice her question, so at least we can hear. She has been raising her hand for a minute. Njoki?
Oh, sure.
Thank you, Madam President. My question was actually on the chat. I think it might have been skipped, but I can just read it out. What is the effect of USD investment to the latest news on China, Russia, and other countries in Middle East looking at moving away from trading in USD?
Joki, it's a great question. So this is just for everybody on the call, if you're not aware of this. So a lot of countries, so China, Russia, Middle East, India, are actually looking at not using the USD to be a trading currency. And the only way you can make a currency just as strong as the USD is if you can get 50 countries globally to use your currency as a pegging currency. So sorry, apologies everybody. I worked at BlackRock, so I'm quite technical. So I will try and make it as simple as possible. But so for example, the Indian rupee is currently now accepted as a trading currency in 35 countries, and they're trying to get 15 more countries on board so that everyone can move away as using USD as the so as the base currency. So as you know, even in Africa, if I was going from Kenya to Uganda and I wanted Ugandan shillings, I first need to take my KES, convert it to USD, and then get Ugandan shillings. So here, USD is seen as the base currency globally, and that's how it's been, and that's why America has always been so strong. Even when the dollar gets better, all money flows back into the US. Very little money gets left in outside of US, because now people are getting better rates, and this is what caused the dollar shortage that we were seeing, and you may have read of it in the newspaper the last couple of months, and well, no, over 6 months, and now the CBK stepped in. So Joki, to answer your question, in my opinion, I think that this will be an incredible shift in the history of finance and even the global economy. However, I still think we are still probably a year to 18 months away from actually seeing this implemented. So the effects of this won't come for a while. It just really depends on how quickly these countries move away from the dollar being the base currency, but it will take time to implement, because what that means is that, let's say, for example, the Indian rupee becomes a currency that is used now for trading. The supply of Indian rupee versus the dollar isn't necessarily there, and they're going to have to create and print more money in order to meet that demand. So I think it's a great decision, because this means that as a trader, so as Dennis, if Indian rupee is available, he's not just looking for dollars, he can now trade in another currency, and it brings a bit more free market back to place and makes it more competitive. Whereas now, let's say 100 countries like ourselves can only rely on the dollar to actually trade. So it's a great question. I'd love to see how this plays out. And even President Ruto himself moved with the whole oil deal. I don't know if you are aware of this, but he actually went to say, okay, let's pay in local currency rather than paying, so local Arab currency rather than paying for oil in dollar. So that's an example of how now countries are moving away from US dollar. Joki, did that answer your question?
Absolutely. Thank you. Thank you so much.
Thank you, Njoki. Thank you, Radhika. Any other question? And I would like to keep insisting, they are sharing their contacts on the chat. So please do take, in case you don't want to voice your question and you'd like to engage them directly. Caroline has done a very good job sharing the contacts and email addresses. So please do join. Please do check and see, just in case you wish to join them. Any other question before I end the Q&A session?
So just one other point. So Geoffrey came back and he said it's on Kenya shillings.
Oh, yes,
so,
yes, he
yes.
did.
So Geoffrey, exactly. So the rate that the SACCOs are giving are anywhere from 18 to 14%, but that's on the Kenya shilling. The rate that we mentioned was 5 to 7% on the dollar. And so when you do currency, when you take into currency depreciation, currency fluctuations, 7% in US dollar is more than 14% in Kenya shillings. So that's why it's a more attractive investment to hold. Geoffrey, please feel free to unmute yourself as well and ask us just if you have another clarification or you'd like anything.
Geoffrey? Okay.
Or not.
Hi,
That's
sorry,
Yes.
my name is good. That's why I'm trying to ask. What I was trying to put across is, okay, on the long run, we have gotten current
Sorry, Geoffrey, I can't hear you. I'm not sure if it's the same.
His network.
So
Geoffrey, we can't seem to hear you. You're breaking. Okay. Maybe you type out. Okay. Okay, any other question?
Can you hear me now?
Yes, Geoffrey, now I can hear you.
Okay, my question was, I've seen that the dollar rate just has been more or less stable, losing maybe between 4 to 6%. So if the circles are giving us around 18% and you're saying you're giving us 5 to 7% USD, then even if we subtract the 6 or 7%, comes to around 8%, then it's not so much compared to thought. Or my understanding is different. Maybe you can correct me.
Hi, Geoffrey. Yeah, so what I would say on that is that when you invest in the dollar, you're actually hedging, so you're actually protecting yourself from any further fluctuations in currency. So going back to central bank intervening in the dollar prices, it doesn't mean the Kenya shilling isn't weakening further. They've just intervened to keep our currency stable. But as soon as they start stepping away and letting the market be free market, you'll see some of that depreciation come in. So the question isn't so much that you're getting a better return on USD. All in all, give or take, it's probably a couple of 1 to 2 to 3% difference. So you might get to 1 to 2% better on the dollar. What you're protecting yourself against is significant depreciation. And I think if you have, for example, half your spending in dollars versus Kenya shillings, so let's say, you know, you're an importer, or you want to send your kids to university in the future abroad, or, you know, some of the products you use at home are imported, that's why it makes sense to invest in the US dollar today. Because you're the thinking is not just the return, the thinking is what will happen to the dollar in 3 to 5 to 6 years time, what will happen to Kenya shilling in 3 to 5 to 6 years time. I worked at BlackRock. We had the best analysts, the brilliant minds, so much data. And there's one thing about currency, no one knows where it is going. And even people who pretend to say, yeah, I think the dollar is going up, the dollar is going down, they don't have any, they're just guessing, to be honest, is my opinion, and that's very much my opinion. But the reality is that currency is a very difficult thing to predict. And yes, you might be able to predict it 30% out of the times right, but majority of the time you can't. So the question that the thinking behind we're saying you should hold USD is because we have seen depreciation. We've seen depreciation in markets like Nigeria, Ghana, Ethiopia. And the reason isn't that the country is not doing well itself. Their GDP still is strong. It's just other factors. So the value of investing in dollar is to say, I'm protecting myself from any significant movements in the depreciation of Kenya shillings. And that's why we say 50-50. Typically, if I thought that the Kenya shilling was not a good place to hold your money, we would have said actually 70% in USD, 30% in Kenya shillings. But actually, before this year, if you had invested your money in Kenya shillings, we did this analysis, you would have made more money holding it in the infrastructure bond and the fixed deposits, etc., with your SACCO over a 5-year period compared to the dollar. But since mid last year to this year, actually, those numbers are actually better in USD. So what we believe as advisors is that actually you're better off hedging or protecting yourself from that movement, and you should just hold 50% of your wealth in USD and 50% of your wealth in Kenya shillings. And this way, you're taking away the nightmare of what's happening with Dennis at the moment, who is saying, I have to maintain float and I don't know what to do because I can't source dollar. And that we can be in that position as individuals as well when you know we need USD for certain uses when you're going traveling, etc. So that's the rationale behind it.
Okay.
There's a question from Sami saying, crypto, how much should I hold in my portfolio? So full transparency, I hold a bit of crypto, but it's all money that I'm willing to lose. I personally think crypto is a sham. No one has fully understood it. It is a meme stock as a whole. So the whole asset class, I believe, is driven by social media influences and the power of how quickly information moves, but I don't actually see it being a real currency for a long time. And by long time, I mean 10 to 15 years, despite everybody on social media informing everybody that it's going to be traded as a normal currency, just like that. And the reason being is it is definitely a pump and dump scheme, Sami. I feel like there's a scam every 3 years. It's just the nature of humanity. We're greedy, and all we want to do is make a quick buck, and me included. But actually, the reality is that if you just invest responsibly over time, you hold the traditional stocks, then the traditional funds that you can get, infrastructure bond of Kenya, the S&P 500 and the technology fund, I promise you, if you look back 10, 15 years, you'll be much better off than holding crypto. And the reason is that nothing adds up about crypto. The cost of producing the coin is so expensive. The fact that it's unregulated, it's full of scams, people have lost billions. Thirdly, they're saying that it's a diversifier to normal markets, but this crash that happened in September last year was an example that it's not a diversifier. Crypto went down, traditional stocks went down. So why are you holding something you don't fully understand? And that is one thing I say to all my clients whenever I speak to them, is when it comes to investing, you must always invest in something you understand. If somebody can explain it to you simply, that means it's something that you should hold. But if it's all technical and big words, and this is why Martyn didn't present a very complex presentation, is because you should understand what we're saying in normal English. And that really is the value that we bring from Ndovu.
Okay, thanks. Thank you, Radhika. Thank you. I would like to, is there any other question? Is there any burning question before I close this session? I'm closing it now. Okay, Radhika, I'll ask one last question, and this is for most of us and our benefit. Now, a lot of us on the call are Rotarians, and what we do as Rotarians is we have to pay our dues to Rotary International with dollars. And of course, it has been a concern that with the dollar rate going up, we as Rotarians, how do we find ourselves in a secure place, or how do we protect ourselves? And hence the reason why we had this conversation today, because we can see normally our year starts from July to June, and hence the question someone asking, how do you see the rest of the year playing out? Because incoming presidents, and I know we have incoming presidents on the call, they're seated and asking, how do we put out, or how do we calculate our dues or our subs for our members? So from where you sit, how would you help a Rotarian who has this question, who's asking, okay, I have to pay dues, I am not sure how to go about it. Do we come in and partner with Ndovu as a club? Would it be individual? Can we send them to you? Do you, how would you hedge us and things like that? So those are, and I know that's what a lot of people are asking on the call, maybe asking themselves behind. I don't know whether you lost me.
No, so I'm just going to repeat the question just to make sure I understood it. So the question is that so the fees are all paid in dollars, and the fees are only due in every July, I guess, or June, doesn't matter, but it starts at a point in time. And given where the dollar is going, and I will confirm that from my sources, I know the dollar is going to the Kenya shilling is going to weaken further. It will. until it gets better, which is fine. But again, like I mentioned a couple of minutes ago, no one can really predict it. So this is the thing, it's me making an informed decision, but it could be wrong. And essentially what I would say is that so right now the Bank of England, not the Bank of England, CBK has intervened to stabilize the rate at 130. 130, 132 is roughly what people are selling their dollar at, and they're buying at 134 to 136. What I would do in this instance, say the fees is $1,000, I would say, okay, I'm going to make a wise decision to say I'm going to try and save or convert some of my fees into dollar today, whether that's through an investment or just hold the cash dollar. Not cash, but you know what I mean, in your bank account, hard currency, and then see where the markets are going to take you a little bit on. What I would advise to do is just invest it in a US denominated, a guaranteed, a safe US denominated investment, which you know is going to generate actual returns. So like the 7% that we had mentioned, and or any of the funds on the platform. And that way I would, you're hedging half of your risk. You're not saying I'm going to do the whole 1,000. I don't know what the fees are, but the whole 1,000, I'm going to make an informed decision to say, I will be in a better off position. You'll be in a win-win regardless of what happens to the market. That's how I would position it. Was that clear? Is that a clear path of... Can you hear me? Hello? Oh, Caroline, can you hear me?
Yes, I can hear you very clearly.
Okay, perhaps the network dropped.
We can hear you. I think we
Okay.
just lost but I think thank you for that answer. So I'll probably give us a minute. Just give us a minute. So, being that probably there is no one else who has a question, so allow me to invite Past President Sami Malaki to give the vote of thanks to our speakers. PP Malaki.
Well, thank you very much, Muto. I really appreciate. Thank you, Martyn, Radhika, Caroline, and the entire team at Ndovu for being with us this evening. It's been quite informative. You have managed to simplify a very, very hard topic and make it enjoyable. I'm in finance, and every time I talk about finance, people zone out. So I'm really excited and hoping to learn from you how to simplify and just make it intuitive and enjoyable. Thank you. So we usually give a gift to our guest speaker. So I guess the team organizing today's fellowship will reach out to you with a gift. And I'm sure many people in this fellowship this evening will reach out to you. I know most of us are, mid-level and having young children who we aspire to grow and probably study out of the country and are looking to invest towards that. So thank you again. You're most welcome to our fellowships. We meet every Monday at Royal Nairobi Golf Club. And yeah, it will be good also to convert some of you to be Rotarians. It's a great pleasure to listen to you, and have a wonderful evening. Over to you, Madam President.